Perfect. Thank you for that. Yeah, so good afternoon, at least for me. I'm in rainy Florida, just north of Orlando, Florida. So it's always a pleasure to be here with you all today. So we're gonna have a little bit of fun. At least I'll have some fun, and hopefully you enjoy yourselves as well. Now, I appreciate the bio, appreciate the introduction. I want everyone to understand one thing is that I'm going to focus on simple and repeatable steps to trading. Nothing I talk about today is going to be out of the norm for trading. None of the concepts I'm going to talk about are things that you probably never heard of. But what I'm going to do is show you how to put them together. And we're going to leverage very simple and repeatable steps to trading that, in my opinion, I think are inarguable facts about how the markets work. Now we're going to talk about options trading today, but more than just trading options, I'm going to spend my time focusing on what to option. So I'm going to take you through a simple 4-step process to begin, just to get our minds thinking of what makes price move in the financial markets. Now, this is irregardless of what market we're in. It could be stocks, could be futures, Forex, even the cryptocurrency market. Markets move based on momentum. And if you can understand where the momentum is and how to find it using a very simple formula, that's where you can see massive breakouts occur. And not in months and months, I'm talking about in a short period of time, sometimes days, and at most you're talking about a few weeks in a position. So that's the focus. So let's jump into some of the simple concepts to get our minds going here on the flow of market. It's a 4-step process that I like to apply no matter what I'm trading. I like to be diverse, so I trade multiple markets, not because one's better than the other. It's just you can really add to your income if you can apply a consistent methodology to a chart. It doesn't matter what security's on it. So as we look at what creates price action, right? Now I'm going to pull up some charts. We're going to really dive into some live charts. We'll use TradingView. Then I'm going to actually show you some technology that I use to really help streamline a lot of the search functions that's required of us as traders. So if you can think of the terms of what, when, and how, that sets the process for trading. We always have to identify and answer these questions. What are we going to trade? When do we trade it? And then how do we manage that trade? That's all that trading really is summed up to be. No matter how complex or how simple, the end goal is all the same. What, when, and how. So when I want to trade, I want to avoid getting into some long-term turtles, all right? So turtles to me is where you see the price go like this, right? Just slow up and down movement, not much of a clear directional move. So one of the telltale ways to get into momentum is to understand how to identify volume surge. Many of you have ever thought about or even wished for or hoped that you could catch those big breakouts. You know, these are breakouts that happen all day long. I'll give you an example. This is the top gainer list. This is just from Yahoo Finance. It's accessible. This data is accessible on almost any platform that's available out there for us. And you can see stocks. This is on Friday, right? The market's not open today. It is Saturday. So it's a nice time to be able to take a look at the markets without the markets actually being open, right? But you can see 25% in one day, 20%, 15%. These are all stock price gains in a single day. 14%, 13%, 12%. I mean, it's a great day to be in the market when you can make 12% on a stock move in one day, right? But that's just what happened, right? What created that move in that single day? Now, I'm going to give you a formula that's applicable. Once again, just keep thinking about the thought of what makes price move, buyers and sellers, right? There must be transactions to create a price, right? Buying and selling creates the price action. But what I'm here to say is if we can find the moment where we identify a surge, where we see abnormal activity around a security, greater than normal, that's where you see a price surge. So we'll let the data do the talking. So here's a very simple explanation. We got symbol, we got name of the company itself. You've got the last price traded located in this column. This is the dollars and cents of the change. And then this is the percentage change, right? So this is all stack ranked based on the biggest gain of the day coming up on Friday, this past Friday. These next two columns is where the magic is, okay? Understanding volume surge is what's really gonna drive the breakout. Now, irregardless of the stock price, okay, this is not a penny stock strategy. This is not a S&P 500 strategy. This is chart pattern and volume momentum. So when you look at the volume, this is the number of shares traded in that period. Now we're looking at daily. So this is in the day, which was Friday. What was the total number of shares in individual shares? Not dollars, but number of shares. Then in this other column here next to it, it says average volume. Okay, so that's a historical look at what's a typical day for that particular symbol that we're looking at. What you will see time and time again, I would say in my experience, it's been 9 out of 10 times, any of the stocks that you see with these big gains in a single day will have a surge of volume above their typical day. So let me show you. Now, this one is a 16,000 share day for PYOIF. That's a small dollar stock at $7.90. This looks like this thing just opened up in the market, right? But the average day has been 312 shares. Now, I don't trade down this low, okay? I like to find stocks that typically trade at 1 million shares or more, all right? But I don't want to cherry pick here. I'm just going to show you how this process works. Is 16,000 more than the average? Of course it is. Look at the next one. Let's go to Clover Health Investments. The typical day is 20 million shares. Now that may sound like a lot, and it could be, but take a look at what happened on Friday. 244 million shares traded. Is that a surge? Is that above the typical day? Yeah, it's over 10 times. Stock price jumps 20%. Tuya, just underneath the average. Like I said, it's about 9 out of 10, right? But you look down this list of these movers, you're going to see at or greater than their typical day that creates such momentum for that individual stock move. Now, I know that the theme is options, but what I'm here to say is rather than spend all our time just looking at option chains all day long, what if we focused on finding the best stock to option? So much of what I'm going to share with you now is identifying the what. What are we going to option? And that has to start, in my opinion, at the underlying stock itself. It may seem like something brand new to you, but just think conceptually. How do we make money on an option? Now I'm talking straight calls and straight puts. I'm not going to get into multi-leg options. You know, the speaker before did a wonderful job explaining those. I'm talking about taking a breakout underlying stock and then leveraging a simple strategy on top of that to select the right call. If it's a bullish breakout, or if it's a bearish directional breakout, then we can buy a put, take a long put position. So if we can find that underlying stock, then we can then tailor on and attach on that the option contract, so we can then leverage the power of the option margin and the leverage that we can gain, right? So we're going to spend our time isolating and finding, looking across thousands of optionable stocks and finding the ones poised to break out next. So that way we can then have a clear direction based on momentum to find that. Now I'm going to give everyone in this room some very basic indicators that you can use and apply so you can actually see flow of volume happen. And then we're going to use that information to find out when we find a surge. It's going to be very simple. So most people have access to this. So if you've got TradingView or any charting platform that you have, I have a free account on TradingView. I don't pay for it. And so I'm going to help you identify when we see this volume surge. Because once we know the volume surge, then we know that there is something happening around that stock symbol that we need to be aware of. Momentum is such a powerful indicator that most retail traders take for advantage, okay? Take advantage of. So we're going to flip that script, and we're going to be looking for momentum, and that carries that price action. I'm going to show you on charts here in a moment how to do it. Now, the second piece to the puzzle of understanding what we're going to trade is making sure we have the right direction, not just any direction, right? I don't want to get into a breakout if it's sideways, right? That's not the type of pattern that lends itself to a explosive price move, okay? We want to avoid sideways conditions, anything retracing. We want to only look for that strong direction. And I'm going to show you free indicators to really stack on any chart, and it's going to help you visually see what's happening. Now, it's not going to be as precise as you having the skill to draw trend lines on your own, and it's also not going to be as accurate as if you had algorithms to help, okay? But it's going to be a simple approach to understand the flow of momentum, all right? So, like I said, simple and repeatable. So these two steps here, when we combine them together, helps us to weed through all the stocks in the market to find the right ones, okay? We're not gonna chase anything down. Our goal is to catch breakouts, not chase them down, but catch them, okay? So that's gonna be the theme. Now, if there's questions, feel free. You can always type them in. I've got the question section coming up. If I don't answer them immediately, I'll make sure that I flag them and I get right back to it, okay? So I'm gonna jump over to the charts, and if there's any questions here, or if you have any anything that's bugging you as far as like, how's that set? Okay, I'm gonna give it to you right now. Now, I'm just looking at Tesla because a lot of people have heard of that company. So the first thing I'm gonna give out to everybody is how I set this volume. Okay, so remember what I just showed you on Yahoo Finance, where we had what's happening now with the volume, number of shares, and then we had a baseline average. So it's a very simple formula. So on the top here, I've got this indicator set. It's just volume, okay? It's not an exponential volume indicator. It is nothing more than the most simple volume indicator that you can have. And this is on any software. I use Thinkorswim for my primary trading in the equity market. I know this is on Thinkorswim platform, right? It's very common, this formula. So if you turn on the volume indicator, what you want to do is use a 50 moving average. Now, 50 represents 50 bars. So I'm taking an average, since I'm on a daily chart. Right now, it's daily. And it works on 1 hour, works on 15 minutes, works on 2 hours. It's a universal approach. I call it 4D. It helps to see what's happening in the market in 4 dimensions. We're gonna look at volume, then we're gonna go short-term time frame, mid-term, and then a long-term time trend. So we're gonna do 3 trends, volume. That's our 4D. Some people may be upset because some people pay thousands of dollars for education like this, but I'm gonna give it to you all on me today, okay? So the first set, I wanna explain volume. So 50 on the volume column. And I know, don't worry if you don't want to take copious notes, because TradeThirsty does a wonderful job sending out the recording. So what I like to select here, and I'm building this on the bottom, that's what I'm doing. This indicator you see down here, this is what this is all set up to do. So I like to use columns. So once I have that set at a 50 moving average, on the bottom, you should see, and I will make this a little bit bolder for everybody. There we go. So you see this dark green line that's embedded inside of these columns? That's the 50 bar moving average. And so what I'm looking for on the surge is when I see the columns above that line. That's the surge. So rather than looking at just data, like a stack of data like this on Yahoo Finance, this is visually easier to see. Remember, I'm trying to bring the charts to life in 4 dimensions. So the first dimension I'm going to start with is that volume. So when we see a surge, I'm going to go back in time for a moment, and I'll actually just do the replay option, which is a wonderful tool here. And I'm going to go back in time. How wonderful is that if we can go back in time? Some of you may want to go farther back in time, but I can't do that for you personally. Okay, so we're just going to talk about the chart. So here on September, or not September, the 17th of November, right before Thanksgiving, you see this big old bar pop up. So here was the close on the previous day, November 16th, closed at $408.09 for Tesla. That next day opened up with a massive gap at 460. See the price up here? I'm talking about this price. So we opened at 460, ended up closing about 441. Okay, so massive gap differential. So what did we just learn about volume? Well, take a look what occurred on that day. You see how the column broke above that 50 bar moving average? That's a surge. We want to know that. We want to be able to visually identify those surges in the market, because this is the outcome of it. Just because we create momentum that day, that momentum can keep going. So imagine the farther you pull back a slingshot and then let it go, that creates massive momentum or inertia in the markets. You can't see my hand, it just disappeared, right? That's the surge, and look what happens with that momentum. Look, another surge day. See that price action move? This is what a surge and a breakout can do for us. Now, look at all the momentum that started. You see all this low volume? We had this huge decrease of volume for Tesla. So imagine all that energy was being created because it just was slow. Then pop, there goes the volume. So where do you think we want to catch these? You want to catch this up here? No, you want to catch it at the moment of the breakout. At the moment of breakout, because from a distance standpoint, if I can get closest to that moment of breakout, then I've got more opportunity for that price to surge and move. And look at that momentum. It's not a one-off experiment, folks. This is a time-tested focus of what trading action does. You can't have price action without trading action. The cause is trading action, the effect is price move. And when you get a surge, that surge continues to move and move. So if you can find yourself being able to identify this type of breakout trading, you're going to really find yourself in positions where you don't have to hold these trades for months and months and months on end. Now, one of the things about options trading that we have to always be cognizant of is time. Now, you can hold a stock forever. You can make so many mistakes trading stocks because ultimately, going back all the way since the start of the stock market, right? You can buy a stock and it's making money today. I mean, it's almost every stock that's been created 30 years ago is up on when it was first in the market 30 years ago, right? Because that's what the market's done historically. So you can make mistakes and get away with it in the stock market. If you have the time to hold it, if you've got enough capital to hold the stock trade outright, right, where there's no expiration, then you can overcome many mistakes. But if you're trading options, we've always got to be worried about when that expiration's coming up, right? So it's even more prevalent and important to ensure that we have timing down, right? So that's where timing comes in. But this is applicable on any stock, and I can go to any stock, any time frame. Let's look at CX. Okay, this is another stock. I love these small stocks. You're going to find out about me as I love low price stocks because they statistically have a greater percentage gain per day than $100, $300, $500 stocks. It's a fact. So I love also trading options, straight calls, straight puts on low dollar stocks because they've got a greater move opportunity, greater percentage gain than the larger stock prices do. So I primarily spend and trade on $40 or less stocks to trade options. My personality is a little bit more enthusiastic and I like a little bit of action on the charts, okay? But even here, you see how we had a low here. This is on the 25th of March, right? You can see this low on a simple pattern. Look what happened. We had a surge of price action above the average, created momentum over the next, what is it now? 3 weeks, right? I'm just looking at my calendar. So just with that momentum created, hit the bottom and rallied up. It's up 14% in just under 15 trading days or 15 bars. And you can go chart after chart. And just by applying a simple formula on the bottom, you can really start to see where the market moves. Every single time you see this surge above these columns, I want you to start to think and look up to see what's happening on that price. And 9 out of 10 times, you're going to see a bigger move historically on days above volume than you ever will on the low volume days. If you haven't ever watched that, you will, and I challenge you, just do it now. From this point forward, regardless of a purchase today, you can use this. This is a momentum-based strategy just on volume. Now, I'm going to give out 3 other sets up here, right? We're going to do 4D. Now, like I said, this is not going to be everything you need, but it's going to be a world of difference on how you look at charts. So now I've just got 3 very simple. These are not exponential moving averages. These are just 3 moving averages. And they're set up in a manner that allows us to see a tight trend line, right? Super tight, intermediate, and then a longer term trend. That's all this is. It's a trend look. And it's like I said, this helps just really streamline the approach. You can get a lot more specific if you do manual trend lines. You can also, in a moment, I'll show you a algorithmic trading engine that I use personally to help me find these momentum trades. But it's very simple, okay? It's a 5 moving average, it's a 17, and then a 35. So as you can see, I'm not using a 200-day moving average, right? That's more for the investor. I'm talking about trading the market. So there's a distinct difference in mindset and approach between investing and trading. Investing, I'm looking out farther into the future, 6 months to a year plus. Trading, I'm looking at catching highs and lows right now and then maximizing the exit by buying at the low, selling at the high. Okay, so this is a very, very simple setup to see the market in 3Ds. And so this is how it works. I'm just going to be a short little explanation. And this is here to really help to set the tone for, am I in an uptrend? Am I in a downtrend? So I'm going to go back in time again, and I'm going to start this run just so you can see the flow of what we look for. Now I'm going to talk about the recent move here. So this is a few weeks ago. This is the 26th of March. So now I'm on CC. Okay, this is a chemical company. So right when this bar, right? So green bars here are bullish, okay? Red are bearish. As soon as I saw this price close above these 1, 2, 3 simple moving averages, I think uptrend. That's what we look for, okay? So we're looking for those crosses to take place. You see how it reacted after that? And then you can see how it also reacts off of the trend line. So it came off right and bounced right off that 17, right? See that orange is the 17 in the middle. 17 is the middle. Yeah, I've got some questions. Rajesh is asking, can we do 8, 21, and 55? You can do anything you would like. I just know historically these are a great balance to give me trends. Tighter, I can get tighter on the numbers, I can get looser on the range, right? Because all it is, when you see a 5, maybe you don't know what that is. You may know, Rajesh, but maybe somebody else doesn't. Okay, that's the number of bars I'm building the average off of. Okay, so close price of the 4, open, high, low, and close. Close is the most relevant. The close is the most valuable price that you see. So when I have a moving average of 5, now those are simple, that's not an exponential, okay? Like I said, simple. 5 means I'm taking the average 5 close price and it's building me an average trend line, right? That's an average price over 5 days. The 17 is an average price over 17 days. What's the 35 based on? An average over 35. So it's a larger picture. So it's a wider average of data, right? So that's why you can see the red line, which is my 35, and you can do any color you want, right? But that 35 is smoothed out more, right? It's less erratic, less trend change on the larger picture 35. Now, if I'm investing, if I'm looking for a long-term investment position, then I'll use a greater moving average, like a 200-day. Okay, I'll compare like 100 versus 200. I'll do a 50, 100, 200 combination. Okay, but I'm not talking about that today. Okay, that's, to me, I'm not a 6 month out, 12 month, 12 month out person. I'm a 1 month or less type of horizon type trader when I have my trading hat on, right? So all we're looking for, and you can just go back and you can put this on any chart and you can see how it helps simplify what's happening in the market. Now, practice it, look at it, just apply this to any chart that you're trading. And the goal is to help understand what's happening right now. So when I pull up a chart, right, like right now, let's go to Friday. Are we in an uptrend or downtrend? Type it in the question section. Are we in an uptrend or downtrend based on where that bar is in relation to the trend? Been working out too much, a little sore. Yeah, uptrend, right? Uptrend. Let's go to Tesla. What's Tesla in? Up or down? Let's go to, I don't know, what's Netflix? Uptrend, okay? Look how, I mean, we don't have to make this complex. Oh, what's Ford? Uh-oh, right? Downtrend, okay? So that's why I like to call this 4D. It's on me. I know people have spent thousands and thousands of dollars for education like this, folks. I'm here to simplify this, okay? I'm here to simplify this because this just helps us to understand what's happening. Now, this is very tradable. I mean, you could just trade off this, understand where to get out. That's the missing link here, right? Is, okay, I see it. There's Ford, bearish. So if I'm trading options, I could set up a put, right? I can buy a long put, which means I want the stock price to go down. I use the leverage margin of the option. Now I can really ratchet up the profit opportunity, okay? Let me go back to Ford here. So Ford back here, right? Look at this big break. That's an old trade. We already made money on that one. I'll clear out that, okay? See, look at the break. This is a great example of how we use it. Let me just show you once again. But I challenge you all, practice this. You'll be amazed at how simple and quick you can pull up stocks and go, oh, okay, up, down. You know, when it gets sideways like this, okay, when you see all this start really crossing back and forth, think sideways. You know it's in a trend when you've got a clear action above these lines, okay, especially above the 17 and 35. As long as those candles, you can use open, high, low, and close. I don't care what you use as far as bars or OHLCs. You really want to see, as long as those bars are above that 17 and 35, then you're in a trend. When you start to get, you see how it's getting all crossy here? You can just see it visually. Think sideways. It's not clear. It's not a clear break. So if I come back here, here's a great example of it. So as soon as we see this, right, what are we doing here? That's a good, I'm glad I just stumbled on Ford. I already have exactly what I want typed up. So let's go back to the beginning of the year, okay? You just got done celebrating the new year, 2021. You knew Ford was showing up. I'm gonna show you how to find these, okay? Because this strategy is meant to identify any price action, any pattern, and making sure we got volume with us, okay? But knowing that Ford is here at this moment in time, that's gonna be the magic I'm gonna share with you in a second. The search, finding the stock at the point of breakout is the real magic of what I'm gonna share with you in a moment, okay? But let's just say you happened to stumble upon Ford on January 11th and you pulled up your chart and you saw this. Do we want to buy this or sell this? Would we buy this stock or sell the stock right now? Remember what we have. We've got 96 million shares traded. Okay, 96 million shares were traded on this day. And the average was 66 million. You can see it right here. See this data that shows up next to this indicator? 96 is the actual volume on that day. The darker green is 66 million. The column is well above that 50 moving average on the volume, isn't it? So we know it was a directional momentum volume on the buy side because we closed bullish. So that is a simple way to know, okay, which way was the volume? Was the volume selling or buying volume? Well, it's clearly buying, right? It's time to buy that pup. So you can do one of two things here. I can buy the stock outright, which at $9, it's almost like trading an option anyways, $9 a share. Or what else can I do? I can buy a long call. I can buy a long call, right? And I'm going to give everyone in this room a simple 4-step checklist too to pick the right option. Also on me. Also on me. Okay, so I'm going to give you a 4-step process to select the best option chain. Not multi-leg. I'm not talking about condors or any other bird that flies or doesn't fly. Okay, I'm going to give it to you. And it will literally change the way and simplify how you pick the right option chain. But it's a buy, okay? It's a buy. We just broke the trend line. We had momentum behind it. And I think you know what happens to Ford. It goes off like a rocket ship, okay? But this happens all throughout every single day. You know, there's so much hoopla about GameStop and its massive movement. Sure, it was an awesome story about the short squeeze. But what I see day in and day out is there were breakouts that happen all day, almost every single day in the markets. And when I'm talking about one out of the tens of thousands of stocks to trade, you know, I track about 3,000 optionable stocks, right? But in that group, you're seeing 5, 10, 15, sometimes 20 or more stocks that break out over double digits. So if you can know how to identify them at the moment of breakout, all your job is then is to decide stock trade, option trade. And if I give you the formula to find the option, and I'm going to do it right now, and how to select the option chain, then from there, all you've got to do is make sure you've got a clear-cut exit strategy. That's all you got to do at that point. So I challenge everybody, use this. And it doesn't matter if it's cryptos. Let's go to DOGE, the big move. If you've seen cryptos, look at this rocket ship. I'll get rid of my analysis here for everybody. Okay. You may think, oh, cryptos, that's crazy. Well, look what happens here. So let me show you percentage move here, and everybody here will know exactly how to trade cryptos if you apply this strategy. Because the power of the crypto market is that you've got to be where the volume is. Okay, so let's continue the volume and then the conversation about how to put it together. Am I buying or selling? Okay, I'm giving away a lot today, aren't I? Probably good I went last. All right, so check this out. Let's go back a few days, 6 days. If you pulled up DOGE, because maybe you heard about Mark Cuban saying that they're not selling, they're gonna hold the position that he's got on DOGE. They're accepting it at the Mavericks game, basketball, right? And you pulled it up just to see what was happening, and you saw this chart. Are we above those 3 indicators? And did we have a volume surge? Look at the volume indicator. The average day was 18 million coins traded. But on the 11th of April, 6 days ago, 50 million coins. Do you think something's about to happen? Type in a yes if you think something's about to happen, right? Oh yeah, big time something's about to happen, right? So like I said when I started the presentation, it's applicable on any financial market. And look at this rocket ship. Look at the volume. Look at the volume break. 50 million, 56 million coins, 128 million coins, 107 million coins. Big day on Friday. 272 million coins. I don't care if that's shares or coins. Volume is the mover. 400+% move. Even when everybody's taking their profit, because I know people personally that bought that thing at 0.00000004 something. You know, we deal in millions of a penny, millions of a dollar. Okay, that's how many decimals go out. Dollar's a dollar, percent's a percent. Okay, even when everybody taking their profit and paying off their mortgages on this trade, still 80 million shares, coins traded, right? Volume, right? So I hope I am the utmost genuine when I say this. What I just gave you all right here is worth thousands and thousands of dollars. And yes, this isn't me drawing. I'm a master chartist. I spent over a decade. Fibonacci's, any technique you've ever thought about on a chart, any indicator you've ever heard of, I am a master at how to develop them. I can run any chart, any type of style. But this right here for retail traders that aren't doing this full time, I had the luxury of being paid to learn how to do this. Most people do the opposite. Most of you all pay to learn how to do this, right? That's the difference here. So I have no problem giving this up, because what the power is understanding how to find it at the right moment. Because to go full circle here, once we know what to trade, right, we now have to understand when do we trade it. Okay, so let me go back into the equity side. I love it, Jesse. Matt has saved the best for last. All right, Rajesh, what is the steps? Okay, so we're gonna do options after I walk through when. Okay, the when is very, very important here. So let's talk about that. So what to trade is accomplished by these first 2 steps. Now I gave you a very simple way to do that. Okay, I gave you the volume indicator, gave you the strong direction using the MAs. That's what. The next crucial step is when. Okay, timing the entry. Just because we can doesn't mean we should. And just because we should doesn't mean we should right now. Okay, so this, what I'm going to share with you all, gives us a level of time. We're going to buy time by having a precise entry strategy. Okay, super precise entry strategy. We're not going to chase anything down. Our goal is not to run and try to catch the market, because in this world of volume trading, we want to be there at the moment of volume to catch the momentum the next day. I'm talking daily trades. I'm not talking about scalping the market, though this is just as vital in scalping the market. I like to slow down. Believe it or not, you can tell my personality, right? I have to slow myself down because I'm highly optimistic. I'm not a pessimist by any means. Everything looks good. I can tell myself a story all day long about how well this stock's going to break out. I'm going to make $1 billion. Okay, I can do that to myself psychologically. So for me, this next technique has done wonders to slow the market and slow myself down when trading. So this is very important, timing. Let's go back to this Ford example because I have a Ford truck, okay? And I love Ford. So we're gonna go back to Ford. Now I'm gonna put this together for everybody. So let's go back to that January 11th time frame. And now I'm going to talk about timing entries. Okay, we've already talked about what to do here. So this is a strategy that you can use, but I'm going to encourage you to do this at the end of the day. Once the market's closed, so we're talking stocks, we're talking options, right? So after the US market closes, this is when I highly encourage you to use this strategy I'm going over right now with you, okay? End of day stuff. You don't have to sit there and babysit your charts all day. So what we're going to do is this. We're going to set entries one tick above the bar high, okay? So remember, the day's over. And now I'm going to look back to see what took place in the day to set me up for the next day. This is how we catch. So we see what happened today and in hopes to catch the next breakout tomorrow. So we're going to look at what took place on Ford, right? So we already know that on Ford on January 11th, we saw the surge of action. We saw the bars close above and break above that trend line. Just think breaking the trend line. You can see we broke above, that's the break. Then all we do is we set our entry one tick above that bar high. So at the end of the day, it closed at $9, or the high was $9.32. You can see it. So where's our entry? We set a pending order at $9.33. This is setting a stop limit buy order, okay, if I'm trading the stock outright. Or what I love to do is trade options with a contingent order. Now, we got tons of videos around this, so I won't go into all the detail here today. But you can actually set an automatic entry of an option chain based on the underlying stock hitting a certain price. That's how I love to set these trades up, because it removes myself from emotionally smashing the keyboard. So at night, I set up for the next day, I set up an OCO order, all contingent upon the underlying stock. So I literally have a hands-free, hands-off trading experience the next day. It's a beautiful thing. Once you understand how to do it, and like I said, I've got tons of videos to show how to do it. But it really alleviates the emotional side of just smashing and rushing into a trade. So at the end of the day, I know I'm going to set a pending buy of Ford one tick above that bar high. So if it went up to 932 on the 11th, I set an order the next day to only get me into that position, be it the stock or be it the option, only if Ford marks at or above $9.33. That's my trigger, because I want to confirm that the market is in fact going to break out the next day. Okay, that's the secret to this whole process, is catching, not chasing. So I'm in advance, I'm sitting there. So imagine we set up our pending order at $9.33. So whatever happens, if I go on vacation or I have a meeting, I don't know, whatever comes up in your daily lives today, once I set my trade up at night, I don't have to sit there and babysit my charts. So I primarily trade personally end of day. And so all that has to happen is we have to mark, right? And so we already know it marks. But this allows us to confirm that that trend's going to continue, because sometimes the market will retrace the next day. And we don't want to be in the retracement. We want to sit above that market. So that is the secret to this process. That's the timing, right? And we give that to you. You know, this is, once again, I just gave you this strategy. That's your entry strategy. Now, taking profit off at key levels, that's a whole nother lesson for you, okay? But I don't have all the time to go through every step of the exit. Simple way to take exits, look back at previous prices, just like I did here. That's a profit target, okay? That's a target. Where the market's been, the market likes to go again. So that's a simple exit. So what to trade, when to trade it, timing. And this style of catching breakouts like this really helps to decrease the times we get whiplashed. The times we get whipped, you know what whip is? I buy it, boom, it goes against me. I'm like, what happened, right? That's called a whiplash. you know, like you get in a car wreck and you get whiplashed, right? That's what that is, okay? So this timing exercise, it's literally once a day. So I trade end of day stuff. Now, I've got a lot of people loving what I'm teaching, and I appreciate that. I really do, because to me, I've spent so much time, you know, as Sherry said on the introduction, I was a chief revenue officer for one of the largest financial education, trade, and technology companies. You know, I decided to leave and have a little mini vacation, a mini retirement back in 2018. But I just love trading. I love coaching. And so I'm back with you. Okay. But as an independent, you know, without worry about the revenue line all the time. Okay. I don't have to worry about creating the next best product every 5 minutes. Okay. That's what I love doing this. So I just literally gave everyone in here what I call the 4D trading strategy. Okay. Now, remember what I said. The key is that we have to know who and what is at that moment of breakout. Okay. Because if not, I'm literally going chart after chart. Now I could do it, right? I just got a list of, I don't know, what, a dozen charts. And I could just go like this and flip. Oh, there's one. Here's a, look at iTub. It doesn't have the volume. Okay. So look at iTub. Let's go through an exercise. This is everything from Friday. So this could be set up for Monday coming up, right? Here's that check. Yeah. Let me pull it up for everybody now. And you can take a screenshot of this too if you want. I don't know if you knew this, but in GoToWebinars window, you can actually take a picture with the camera. So take a picture, not of this, of what I'm about to share with you. I mean, you can't take a picture of this, but let me pull this up, and I want everyone to take a screenshot of it. And this is how I pick an option chain. Expiration. So this is options. I'm picking the chain. Time. You got to buy enough time. So if I'm on a daily chart, it's all relevant on what time frame I'm entering on. If I'm on a daily chart, I need to buy at least 45 to 90 days out. I say to 90 because we also need to make sure we have all 4 of the option checklists checked off, okay? So minimum 45 to 90. That's our time to buy it, right? So we're now in April, so we're in June now. So we'd be looking at June expirations. Math of 10% rule is how we determine and pick the strike price. So if the underlying stock is at $10, then at a minimum, I'm looking at a $9 strike, which is 10% of the last price of that stock, okay? The third is we need to have open interest. So when I was talking about volume of the stock, of the underlying stock as being the liquidity factor, and the option side, I'm looking at open interest. That's the open number of contracts for that individual option chain. So 100 or more, because that means that we're dealing with an option chain that is super liquid, okay? We need to have that. And the fourth, I always trade in the money options. These are all long calls or long puts. So on the call side, I'm always looking for option chains in the 65 to 75 delta. That's going to always put us in the money. If I'm going to put, it's the opposite. It's a minus 65, minus 75. But here on the screen in front of you, these 4 steps is what I use, and my hundreds and hundreds of clients that I service use to select their options chains. So take a screenshot of this. This is also thousands and thousands of dollars that people have charged to how to select an option, okay? Because we spend so much time finding the underlying stock, now what we do is we pull up the option chains and make sure that they fit these boxes. If they don't fit the box, we do not trade the option. So once again, it's another checksum balance to ensure that we don't get ourselves into trouble and take options that we should not be in. So take a screen cap. This is what it is. Once again on me, okay? So for the next few minutes here before I run out of time, I will say this. So hopefully everybody took their screenshot. If not, this is recorded, and I know TradeThirsty does a phenomenal job making sure that you all can see this again, okay? Yeah, so Steven's got a great question. What happens if it goes 1 penny up, the OCO is filled, but the stock closes down for the day? These are not scalping trades, okay? Because I'm on a daily time frame, the average hold time that I see in my trades is about 16 days, 17 days. So it's not necessarily what happens that next day, though it's important, right? We'd love to get in a position just like Ford every time, and it just keeps going like a rocket ship. But sometimes it gets in, and then it then takes a few more days to get momentum again, right? So just think 17 days on average is what this strategy on an option will typically put you in a position for. So my whole time on average using these strategies is about 17 days, 17 days or less. Okay, so it just depends. Some a little longer, right? The ones that are longer, usually it's a larger profit target. So it's going to take a little bit longer for us to exit out, okay? So to find what to trade, I don't have a solution that I can just give you because I've never seen a technology able to do it, okay? Because we're looking for certain types of things all in one to find what to trade next, I've never found a solution on TradingView or any other technology that's free out there. I mean, just to be frank with you, to find these opportunities across thousands and thousands of stocks. Okay, if you trade one stock your whole life, then you can definitely just do this strategy, but you've got to wait for the breakout, right? So what I use is what I call Axel. It's my nickname for it, but it's this technology stack here allows me to build and find trades using all what I just taught you in clicks, in a few clicks, because what lives inside of here is 14,000 stock symbols. So when I build a trade and I want to find a trade, this is what I do. I come in here, I click on index. I only want to look at optionable stocks only. That takes my list of 14,000 stocks down to about 3,000. 3,677. I want to then only find, I'm looking for calls. Okay, so right now I'm going to look for buy opportunities to buy a long call. So then I come in and I select the trend I want to trade. Remember I said we've got to time that breakout, get the strong direction. So I come in here, I just click. I want the strongest uptrend stocks and I want stocks in a long-term pullback. Okay, we'll teach you this, but this is what I want to look for. Then I want to find the surge. Okay, remember that break when I see the volume above that bar on the charts on TradingView that I gave you? Now I can do it in the technology all in one. Okay, so I'm going to type in 100% here. That gives me any stock that had a day, Friday, a surge of volume above their typical day. I type in 1 million shares here because I want 1 million or more. I want liquid stocks. Okay, this is what I use for liquidity. Then I hit show my results, and I'm down to 181 stocks that check the boxes above, right? These are stocks that qualified up top here. They had to be in one of these two trends. They had to have 1 million or more on an average basis, so they're very liquid stocks. And they must have traded above that average on Friday, because I'm looking for Monday, right? This is the same process I go through when I'm looking for trades on Monday. So now I'm down to this short list of 181. So what do I want to do? I want to find new entries. Some of these have already left the station. You see all this with a profit? These stock signals have already taken off. I don't want those right now. I'm looking for new ones about to break out, okay? So what I'm looking for in a list like this are signals that look like, where are you at? Page 2, there's 181. So let me go to the second page. I'm looking for these. You see how it says buy, 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 buy. So let's look at Xerox, okay? I'm gonna pull up our chart here. This pending breakout is what I wanna see, okay? This green bar is our algorithms. We'll teach you about this if you wanna learn the technology. I'm not gonna sell you this technology today. I'm gonna give it to you if you allow me to send you trades every day. Okay, that's the service we're promoting. But I will give you 30 days free to use this yourself if you want. Okay. So Xerox, this is our buy. We have a see, it found it. It found it for me, which is the most important thing. I'll show you what it looks like on a chart, just so you can see the correlation. Okay. So big bar, big volume, I want to buy Xerox. Well, I would have to have known Xerox is there. Well, I know it's here because of the algorithm found it for me. Okay, because I told it what I wanted. This is just one way to trade this algorithm. There's many ways. This is one way. So now I take this information. I know my profit target, 2704. These are profit targets. Remember I said automated profit targets? Look how it picked up this previous high. So this is what I trade the option to. So I take Xerox, I go to my account, I use TD Ameritrade, and I set it up. Remember my contingent order? I'm gonna set this trade up. Trade, type in Xerox. I already know I'm going to June, right? Because 45 days to 90 days, scrolling down to June. Now, I'm gonna look at open interest greater than 100. Doesn't happen in June. That's off the list. Let me go down. Let me go a month out. Here's July. Do I have open interest greater than 100 in July? I do. I need 65 to 75 though, okay? So I have the 200, which checks the box for open interest, but I don't have enough delta, okay? I want to get into 71 delta because it's 65, 75. So now I'm looking at the $23 strike, July 16th. So now I set up my order. So now I'm going to set up a pending order. And like I said, folks, we've got lessons on this. This will be recorded if you want to watch how I do this. But now I set up my contingent orders to catch these breakouts without me doing it. I don't have to sit there and babysit my charts any longer. I'm going to take this data here on this signal, and that's going to be my option trade. So I'm going to type in here the entry. I need an entry to mark at 25.24. I've obviously done this a lot of times, so I can do this quickly. I know that I'm probably getting a note to hurry up. So I'm going to set this up. I'm pretty fast. There's my stop loss, and I'll show you what I just did when I'm done with it. So there's my stop loss. I'm building all of this option around the underlying stock. Okay, it's all on the underlying stock itself. And then I'm basing the option trigger off of the stock signal. 2704 is my profit target, okay? So now I'm automatically set up. If on Monday, Xerox marks at my price at 25.24 or more, then I am in the trade, irregardless if I'm in front of my computer or not. Once I hit send, it's going to be in my trade, and I'm in the market waiting for the breakout, right? That is the process that we rinse and repeat over and over again, and it's all based on the end of day. The algorithms are the ones that allow me to set it up. And this is what it looks like. So when it's waiting, come up to my working orders. You see Xerox sitting here? It's waiting conditionally. It's waiting for what? It is waiting for the breakout. That's what it's waiting for, okay? So that's the process that I do and my clients do at the end of the day. And in fact, what we do for the service I'm talking about today is we do this for you. Okay, so if this style of trading, and I gave you a ton of data, a ton of information, and if you love this, then when you sign up today, you're gonna be able to come to my classes. I do this. We have about 13 classes a week. So, and I host 3 of them, actually 1, 2, 3, 4 of them a week. So if you like what you've seen, you can actually follow along and follow us. I love it. Jesse says they need to give you another hour. Yeah, that's the thing. I've talked about the market. I have a strong passion for it. I could spend hours, and I do sometimes on a daily basis, depending on what day of the week. All right. So this service here I'm talking about today is us doing the work for you. Okay. It's me and my team of technicians running these algorithms for you all throughout the day. And it's called the Options Bolt-on service. So since August 5th, this service has given out in profits a total combined of 2,641% total profits. The way you use that number to calculate how much money you made, if you were with us, is let's take $1,000 for example. Let's say you put $1,000 per trade. You take that percentage in a factor. That's a 26-time return on an average investment of $1,000. So if I average $1,000 per option trade that we send to you via email, text message, and we have a membership area where we post every single trade, that's $26,000 in profits. Okay, so it's always dependent upon how much you invest per trade, but that's how you use a number like that. This program is $399 for the year. What you're going to receive from us every day, okay, so Sunday, Monday, Tuesday, Wednesday, Thursday at 7 p.m. Eastern Standard Time, we send to each and every one of you what to trade, the specific option chain, the profit target, the stop loss, and the entry, of course, the symbol, right? Every single day, 5 days a week. So you'll always set up for the next day. And then you do it as I just did when I showed you my TD Ameritrade account, and you input the trade and you're done. And then the next day, we send you another trade. And we constantly update and track every trade together in a huge dashboard that we've tracked every single trade since August 5th. Now, it's only $399 a year, and you also have a 60-day money-back guarantee, but that's not it. You're also going to receive access to me in my Market Pro Live Club trading room to go with this, because my goal is to empower you. What we're delivering to you is a small piece, a small niche of the market. We're only focusing on my favorite type of stock, which are the $5 to $40 stock price range. So your average contract size is going to be less than $500 per trade. Most of them actually come out to about a $200 per trade. So if you got a small account, you got a large account, makes no difference. We focus on the smaller size in this program. But as you learn more from us, you're going to be able to unlock more types of trades. You want to trade the S&P 500 only stocks. You want to trade the NASDAQ. You want to trade reversals, breakout patterns. We'll show you how to do it, because we're also going to give each and every one of you access with this purchase today, access to my trade generator. The Axle technology you saw me just use, you're going to also have access to that as well. And if you like it, you can continue after that. But if you don't, that's fine. Just keep getting our signals every single day. So now you're getting access to the signals that we generate for you following the formula I just gave everyone, plus access to my Market Pro Live training class, and you're gonna have access to the technology I use today. Like I said, we like to roll out the carpet, okay? So these are the types of returns that we've delivered to our traders going back to the beginning of August when we started this very program. So give us 60 days and allow us a chance to show you that this breakout trading does work. And you will also learn how you can apply this on any type of market class that you want to get involved in. Because as I showed you today with just the 4D trading that I just gave to you, now you're going to be able to find out what is ready to break out. Because this is just Xerox. You saw there was 4 or 5 other trades ready for Monday, right? There's always breakouts pending. It just comes down to, do you know where to find them? So where to find them, then what to trade, when, and then how to manage it. We give you every piece of the puzzle in this program, and obviously a lot more. So to sign up, all you have to do is go to this URL right now. It's getaitrades.com/trade and get this special promotion that I partner with TradeThirsty to bring to each and every one of you. So full data, you can see exactly the pieces that we give to you, right? So give us 2 months. If you don't like it after 2 months, no questions asked from us. We give you 100% of your investment back. Oh, 100%. So questions coming in with these training videos also show you how to master the strategy. Oh yeah, 100%. I talk about these strategies every single class, and then they're also archived, right? So we've got a robust membership area, all the videos you need to understand what we're trading, and then how to set them up in your account. That's the biggest learning curve, is setting up the trade, okay? Setting up that trade. This is just the start. There's many ways we can take you into your journey. I got a comment about futures. It's all volume based, right? Every type of breakout you're going to find yourself 9.5 out of 10 times is created by volume. Some of the exceptions is when the market goes bearish and breaks out, right? A lot of that times because there's not buying pressure to hold it up, right? But we teach you these things. But if you can simplify your approach, I promise you it's going to be a lot more enjoyable to be in the financial markets, because once you understand the basic premise, I showed you how you can do it even in the crypto market. And if you like cryptos, we've got crypto technology as well, but I like to simplify this, right? So I think this is the best first step, just to understand, okay, how does Matt and company view the market? What kind of lens do they look at the market with? Do you see an attachment to my personality where you think I could teach you, right? Because I've been doing this long enough. I think there's many fantastic traders. We had 3 others today that are phenomenal traders. To be in a room like this, in front of a group like yourselves, that's not easily done. I mean, it would take some massive guts for somebody who didn't know what they were talking about, that didn't know how to make money, to talk to people like you. It would take massive amounts of guts to do that, and courage, right? So I believe that every trader that is in a room on our end presenting to people like yourselves have something that works. But I think what's important is that not everybody is for everyone. Okay, not every style of trading is for everyone. And I'm perfectly fine with that. And I've come to accept that in my career here in this space. So I think this step is a great first step to see exactly how we operate at a low threshold with a lot of guarantee and risk removal from the equation, right? Because like I said, we got 60 days. It's a trade a day. So we average, because not every trade breaks out, right? So we average about 3 trades actually trigger in a week. So you're talking about in 60 days, plenty of trades to see when you get going. Yeah, so Judith, if you want the technology, the Axle trading trade generator is called and hosted on myprofitgenerator.com. We're going to give you a free month of that. If you want to continue with that technology, then there is a technology fee, right? But I think you're going to be the judge if it makes sense for you or not. I mean, as soon as you all sign up, you're going to get all the access to everything you've seen here. You'll get your welcome emails. You're going to get a detailed walkthrough of how everything works. So a getting started guide. And then also you're going to be automatically registered for all of our classes. Okay, so with that trial of the Accelerate Financial Group's technology stack, you're going to access 13 classes a week that are available to you. And we archive them all. But I recommend you always start on the get started section and then work your way left to right. And that's how you're going to really understand this process flow, right? And then, like I said, you've got that guarantee on the back end just in case it's not for you. And there's always a group of people that it's not, and that's 100% fine too, right? So that's how we always like to keep things simple and repeatable. Yeah, I got some questions coming in about account sizes. Yeah, 100%. So this program is specifically talking about signals that are like the actual chain investments. The average share price is around $2.20. So if I trade one standard contract, that means on average $220 to come in, right? $220 per trade. So yes, this is primarily built for all account sizes. So if I've got a larger account size, then I've got clients that will obviously buy multiple contracts. So instead of doing one contract at 220, they'll do 5 contracts at 1,000, right? So everyone's going to be different. But this specific group of stocks, we're only talking about 1,000 stocks that we monitor with this program. There's another 13,000 stocks that are available in the technology that you can trade, right? But for this program where we actually give you every piece of the puzzle, and I'll give you an example of what it looks like so you know what I mean by transparency. So this is a signal that we gave out, and I'm going to get out of the shower, which is an analogy that we talk about when you're, in the final end of your presentation, right? So I'm going to get out of the shower, right? So this is an example of a trade we sent out for Fossil just to show you what it looks like, right? So here is a signal that we sent to everybody. It says the symbol is Fossil. We posted the trade on November 15th. You're going to buy a long call. January 15th is your expiration. You select in your chain, and you're going to select the $7 strike price. Then you have your go live details. You're going to go live if the stock triggers at 790. You're going to close out at 625 and minimize your risk with our stop loss. And then you're going to take profit at $8.92. Can you follow those instructions? This is what we send to you every day at 7 p.m. starting this Sunday. At 7 o'clock, we'll send out Monday's trade. I gave you Xerox today, but there's a trade. So full transparency, full access to our traders dashboard where you have access to all of the signals, all of them. You want to go data mine, go look at 95 plus trades. It's probably 100 trades now since August. You could set them up manually if you want, or you can set up the contingent order that I did today. Okay, so you can be hands-free and set them up in advance, right? So I think everyone in this room, if I gave you the map and said, this is how you set up the trade exactly, that you could do it. And if you can't do it the first time, that's why we have all these classes to show you. I've got a video also only on how to set up the contingent order, right? The final order. All right, Rajesh, appreciate it. Looking forward to working with you. We got David coming in too, so I can see who just signed up. So David, welcome to the group. Al as well, Rajesh. Yeah, so it looks like we got quite a few coming in. That's fantastic, And some of you may want to go, look, I'm going to put Matt to the test. On Monday, I'm going to go look at these charts and I'm going to apply 40. That's fine too. This promotional offer that you see here at $3.99 is good till next Friday. Okay, I was going to do it till Monday, and I said, let's give them a couple more days. So this pricing, this is normally $708 is our list for this program, $708. But for this room and for you all, you can get it for $3.99, and this expires Friday. Okay, so just bookmark it if you're not ready yet. That's completely fine too. But at this point, I think it resonated, right? Does it make sense? The 4D, it just helps. So when we're sending out trades, you can start to really see how this is working. And then as you get the Axle technology that I used and show up in class, I want you to ask as many questions as you want. and that way we can really maximize your results here. That's good, Chris. That's why I'm not there. Yeah, I'm not there. You got it, Kevin. Awesome, Jesse. Appreciate it. Yeah, looking forward to it. Yeah, so we've got classes. So start Sunday at 5 p.m. And we'll send you this. So you'll have this. So once you sign up, you'll get a series of emails over the next 15, 20 minutes. If not, you just get, a dozen emails all at once. That would be a little overkill, right? So it's all staged emails that would notify you of all the classes. But just for a rule of thumb, you got Sunday at 5 p.m. So this Sunday, 5 p.m. is our planning session. So that's with my compadre, Kevin Dixon. So he goes through on Sundays at 5 p.m. Eastern Standard Time and starts to help us set up for the upcoming week. So we know what areas to focus on, where's the hot sectors, where's the hot industries, and then we also give out signals. Every class we're giving out trades because that's what the engine does, is give out trades. So you have Sunday at 5, you have Tuesday at 7 o'clock Eastern Standard Time, then you have Thursdays at high noon, okay? On top of that, we have an opening bell, closing bell trading session. That's every day, 8 o'clock to 10:30 every morning, and then from 2:30 to 4 o'clock every afternoon. So you're getting twice a day, every day, opening bell trading session. So getting ready for the open market. And then we're with you there for the first hour of the open market. And then we're back with you to close down the market between 2:30 and 4 p.m. The two most highly active traded times in the equity markets, the open and the close. So we're here with you the entire time to help monitor and manage your trading so we can maximize everyone's potential in the markets, right? So that's the overall focus of this event. So at this point, I just got notified that I have hit my limit. I like to hit my limit on my trades, but I've also hit my limit here today. So I do appreciate everybody. It was a pleasure working with you. I've always enjoyed working with the TradeThirsty team. So
we sure appreciate you.
Trades. Thank you all.